Today we will start with the chapter contract costing. So, contract costing is one type of job costing. Job means any work based costing which is applied in businesses engaged in building or other construction work. Okay. Here what happens? Here the time span for recording all the transactions goes beyond 12 months. It will be more than a year. Okay. So what happens? We will not be knowing till the end of the contract gets completed how much profit we have made. So now the question comes, how we will identify our profits? Because till the whole project is over, we will not be knowing whether we are making profits or loss. And accounting believes on matching concept. It believes that how much you have booked the cost, that much of revenue you should book. Related to that, how much revenue is that you have to book, and you have to find out your notional profit, expected profit you have to book. So the question comes, how will you book? So this contract costing came with some guidelines on how to identify profit. And that is the reason it is different from other accounting, other costing chapters. Because here, whichever it is, whichever the company, whichever the business is handled here, it is that which has more than 12 months accounting period. And even costing means your budgeting and all. So the work goes beyond 12 months. Such things are handled here. So you will be finding differences between job costing and contract costing. So here they say, while the number of jobs in hand at any time in a concern may be large, only a few contracts may be undertaken at a time. The accumulation, analysis, apportionment, allocation and control of cost is simplified in contract costing. Most of the expenses are chargeable direct to the contract account. Direct allocation to such an extent is not possible in job costing. As the contracts may run for long periods, there arises the problem of assessment and crediting of profits on incomplete contracts at the end of accounting period. Correct? So, this chapter helps you to recognize your profits, how much you have recognized cost, on that basis how much you should recognize the revenue. So what is the profit you have made, that it helps to recognize here. So first we will understand the terms. The first term we come across is contractor. The contractor, he is the person who takes contract for a price. Okay, means who is taking the work from you, he is the contractor, and the person from whom it is taken, it's a contractee. Okay, like government gives contract for building bridges, roads to the general companies, public limited, private limited companies. So government is a contractee, and the companies and all who take that project, who take that contract is our contractor. Okay, so government is a contractee, and the people who take, like the company, if the company has taken that contract from the government for building the road or the bridges, they are the contractors. Okay. Then the next term you come across is notional profit. Notional profit is assumed, presumed profit. We see at the end of the accounting period, your project may not be over. So the question arises, how much the profit we have made. So we will use some guidelines, and on that basis we will recognize revenue, and when we net off revenue and cost, whatever the profit we get is not actual profit, because still we are not made, because the project is not over. So we call that term as notional profit. Okay. Then we come across something called subcontract. Subcontract is giving the contract. If you have taken the contract from the government, of that some portion you have given to some other person to do that work. So that is called subcontracting. Means giving the contract, whatever the contract you have taken, on that some work you have given to some other person on contract, is called subcontracting. Then surveyor's certificate and retention money. Surveyor's certificate is that what happens as the project goes beyond 1 year, okay, in between the surveyor, he will come to the site where the construction is happening. He will come and see, okay, how much amount of work is completed. On that basis, he will give a certificate that this much work is completed. Okay, like he will, if the bridge is about to be constructed and there are some 4 pillars done and some amount is done, so he may say, okay, the bridge is 100%, then in this much you can call it as 50-60% completed. So he may give that this much amount, this much percentage of work is completed. So surveyor is a person who comes and examines how much amount of work is completed, and accordingly he issues the certificate. And on his basis of certificate, the contractee will give some amount from the contract price. Contract price is the price which is decided by the contractor and contractee for the work to be done. So what happens? The contractee, on the basis of surveyor's certificate, may issue or give some amount to the contractor. Like if the work is if the contract is of, if the contract price is of 1 lakh. So what the contractee may do? He may, on the basis of surveyor's certificate, surveyor would have said 50% work is completed. So on that basis, actually 50,000 he should pay, but he will not pay full 50,000. What he may do, he may keep some amount aside and give some amount as a token. So if he had always planned that 10% he will keep back, and only the remaining amount he will give. So in the 50,000, 10% means 5,000 he will keep aside, and remaining 45,000 only he will pay. Okay, so this 10% he will keep aside, as this is a cover for him. Like if that work, anything damage or anything is visible, for that to protect himself, he keeps that money aside. That is called as retention money. So retention money is that amount which he keeps or holds back, so that if anything happens in the contract, in the work which he has done, he finds something mistake or damage or anything, he can hold it and he can take as a whatever compensation, and he may keep it. He may not pay it to the people, to the contractor. Okay. So this is a safeguard. That retention money is always a safeguard for the contractee. So this 10% is called as retention money, which he holds back as a protection for us, safeguarding himself from any damaged work done by the contractor. Okay. So we came across surveyor certificate, retention money, defective work. Defective is if there is any defect in the work, any damage is there, that works related, any expenses, that he will be charging it to the contract account. Escalation cost. Escalation clause is that, see, these projects run beyond 12 months. So what happens? The prices in the market for all the materials and all may go up. Then the contractor is in difficulty, because he must have fixed one contract price with the contractee. So if prices change, he may find that, okay, contract price is not correct now, because all the prices have changed. Accordingly, the contract's price should also change. So they always have an escalation clause. Escalation clause is that which protects the contractor from any changes or fluctuations in the prices in the market for the products, for the materials. Okay, whatever the material, labor which he is using for constructing that. So this escalation clause always helps him to modify the contract price. Okay, if there is any chances for, because of any contingency or any reason, any prices changes or any other contingency come, this helps him. Okay, so this escalation clause is that which safeguards the contractor from any likely future changes in price or any other calamity. Work in progress. Work in progress means half completed. So work in progress we can divide into two parts. One is work certified and other one is work uncertified. Okay. So what is work certified? Work certified is that which the surveyor came and verified and said, okay, this work is completed. So accordingly, what is the price of it with the profit element? With the profit element, okay. So work certified will be cost plus profit element to the extent of work completed. To the extent of work completed. Okay. And work certified is that which is not completed but it's not in a raw material form. Something is formed but it's not a bridge or anything. It is like they from the raw material they have made the bridge pillar but they have not attached it to the bridge. So we can't say it is a completed part and the surveyor wouldn't have certified as a part of the whatever the final outcome. It is not. It's just a pillar right now. So it is completed but half completed. So it is not in raw material form but it is completed to some extent. So, and this will be included in something called work uncertified. And this work uncertified will be always at cost. Okay. And the third one, the amount of profit taken as credit. So whatever the notional profit we have included that. But normally you will come across work in progress will have these two, work certified and work uncertified. Okay. Then profit on incomplete contracts. So after verifying what is the work certified, what is the amount of work completed, and on that basis what should be the amount a contractor should receive, and in against that all the costs he is netting off, whatever the profit he finds, that is profit on incompleted contracts. Okay. Next, now whenever there is a profit on incomplete contracts, the question comes, this is a notional profit because we are not sure, okay, how much the profit actually we have made. Like how this accounting will work, the contractor will make a contract account. Assume he is making a building, so building or else will take as a road or a bridge will take, bridge is better, bridge is making a bridge and bridge related contract account is making. So this is the debit side and this is the credit side of the ledger. Okay. So on the debit side he will debit all the expenses. What expenses he will come across? He will come across material, okay, cement, sand, whatever material. Then the people who are working, construction people, wages or labor. Then other expenses, whatever the expenses. He may use some machinery for this contract. So depreciation on that machinery. Okay. Or any other expenses, whatever it is clearly related to this contract. Only related to that contract will come, not to the whole business. The person may be running a big huge business where he may construct a lot of other things, but we are making the contract account of only that bridge. So that bridge related expenses, materials, wages, expenses, machinery used on that construction, that contract, that particular bridge construction, on that whatever the depreciation, that only will be debited here. Okay. So all that expenses will be debited. Here on the credit side you will come across work in progress because the project is not yet completed. So all things are in work in progress. What is there in work in progress? Work certified and work uncertified. When I say work certified, I explained you, it is that portion of work completed which we have taken with the profit element. Like I told you, if the survey said 50% of work is completed and your contract price is of 1 lakh, so the contractor should receive 50,000, right? That 50,000 he will put it here as work certified. Understood? So always work certified will have profit element with it. It's with the profit element because we are taking the contract's price portion, how much the contractor should receive, correct? So it is with the profit element. Then work uncertified, I told you, which is not in a raw material form and somewhat completed. That and work uncertified will be always at cost. At cost. So we will put that work uncertified. Then any materials at the end. So materials carried down, which is in the material form only, which is not taken any shape. That material. Okay. So any other things remaining at site, material at site at the end, anything all will come on the credit side. After doing this, because credit side is having a profit element, we will get something called profit here as a balancing figure, assuming this is making profits. So profit is, so we'll get profit here, which we will call as notional profit, because this is assumed to be. Okay, assumed to be, because at the end of the contract it may not be sure that we are making profit. Maybe next year we may make, because of changing in price or something, we may go in loss. But at this position, at the end of this year, we are making profits. According to the matching concept, how much cost and revenue we have recognized, we are making profit. So we call it as a notional profit. Okay. So now notional profit we have identified, but is that whole profit we should take it to our P&L account as that is a profit? Then the costing brings this picture. They came up with this, which is very important. Okay. So it is on the page number, I have missed out here. Yeah, 281. Page number 281 in study material. So what it says, contracts which have just commenced, and which is completed less than 1/4, then we will not take any profit element to the P&L account, they are saying. Okay. Then they are saying if any project which is completed more than 1/4 but less than half, then you will take 1/3 of the notional profit to the P&L account. And then they are saying which are completed more than half, then we have to use any of this method to calculate our profit element, which we will take to P&L account. Okay. In a simple terms, I will show you the table which explains whole of this. Okay. I'll later show you, but just remember these three criteria are there to understand how much amount of profit will go. From the notional profit, we will take out that profit which will go to P&L account, and the remaining we will keep it in the reserves. Understood? Next, one more thing which I want to explain is, and I said the surveyor comes, he will verify and say this much work is completed. Okay. Right? And on that basis, work certified we will calculate. Correct? Now, work certified is on work completed, we calculated work certified. Work certified is nothing but, can I say, percentage of contract price. Means percentage is what percentage? Percentage of work completed on contract price. Contract price I told you, it's at the start, while making the contract for the construction of building or whatever it is, they have decided that this whole project we will be taking price for 10 lakhs and all, that is a contract price. So can I say work completed percentage? If I apply on contract price, I get something called work certified. Okay. Work certified, as I said you, work certified whole amount is not given by the contractee on the spot. Contractee will keep some amount behind and give the remaining amount. So can I say work certified is nothing but cash received by the contractor plus retention money. Correct? Retention money. So whatever the cash he may receive plus the retention which the contractee has retained, that put together should be our work certified. This one more you keep in mind, because the questions has some areas which requires you to calculate on this basis. Okay, so we will turn to the sums and we'll start solving the sums